Hey traders, checking in on the stock market today. We had the financial sector weak and the tech sector and growth names strong. That's certainly been the most common pattern that we've been seeing over the last few months. I'm going to review the bigger picture rotation that we've been scouting over the last month and how I was a bit too early with the financial sector weakness and how that impacted how much money I'm going to make because of this pullback. And we'll also look at some review on establishing swing trade game plans, and we'll use some tech sector names as examples. Let's check it out. So the S&P 500 futures chart, this was our 4-hour support line from last week, and I had a resistance line that looked like this, and that hasn't been in play over the last couple weeks. So what I did to start this week is I deleted that line and I hugged a tighter line, which has been in play a bunch recently. So this is how I started the week. We then broke support. I use trend lines as a guide. Price levels matter more to me than trend lines. So I see this break and I said, okay, we have broke the rising wedge bearish. But if we are going to confirm that bear break has taken place, we have to take out 42.3140, which is our last high or low. We didn't do so, and here we are up at the all-time high after hours. So you can look at this and say, oh man, what a fake out. But in reality, we never lost the uptrend as far as the price levels are concerned. So for me, price levels always outweigh trend lines. Trend lines are great visual guides. Price levels are king. So SPY bulls in complete control. And really they surged at the end of the day because that's the first time all day. And I just had a flashback right now. A member messaged me and said, is this falling wedge valid? And I said, yep. So good eye, I think it was the BODs, good eye, the BODs. That followed through. That explosion was really just the first time all day that the financial sector and QQQ were going up at the same time. And SPY really responded well to that. So SPY is up at the highs. The bulls are in full control. And again, it's the constant rotation game that we've been seeing. So QQQ, all-time highs. Clear bull break. Anything above 328.28 is a daily high or low. The rotation game is in full effect as we are seeing money leave the financial sector and the names that are related to the financial sector, and it's been going into growth over the last month, and that is continuing. So here's the financial sector, pullback, weekly time frame, still an uptrend, still EMA 12 support, no big red flags whatsoever on the bigger picture chart of the financial sector, but short term, clearly the bears have control, and they really affirmed that on Thursday, and they're following through with it since then. So we have an hourly downtrend and a daily downtrend to be watching on XLF. I would call anything under 38.18 a daily lower high, next bounce attempt. So just a little bit of hindsight and reflection, because I've never really been one to anticipate bigger picture macro rotation. I've been a reactive trader for the majority of my career as a trader, where I see the price doing something and then I react to it. This over the past month, certainly if you've been watching, we were looking for this to happen before we were getting all the signs that it was happening. And I must have said the word growth in the last month more than my entire previous life combined, because that's not really a common word that I would use, but I'm using it every single day now talking about stocks. So go on point with the growth rotation. Timing was right, got the monthly higher lows. It took a little while for the bulls to get some momentum, but timing was on point. My financial sector short timing was off. I was too early. I was looking for this short here, and the bulls saw a new all-time high. So my reflection is, okay, what could I have seen different? And the entire time, I was just going back and looking at my messages where I was saying, I do not believe this bull move. This looks like distribution to me. It looks like we are seeing these higher opens that are allowing for selling to take place during regular trading hours. The real volume comes in when the bell rings. The real volume is selling, but it allows for the selling to happen at higher prices because in extended hours, the price is raised on tiny volume. So in hindsight, that all was accurate. But being right and making the right trades are two very different things with trading, and that is why trading is so difficult. Because I was right, but I was early. So they shook me out of half of my short position on the financial sector because I was looking for something to happen. The growth bounce was happening for 2 weeks at that point, and XLF is still at the all-time highs. So I pretty much was saying to myself, okay, I was right on growth, but I was wrong on where the money was coming from to go into growth because XLF is still strong. But in hindsight, I've learned a couple things. I was on point in terms of not believing this bull move and feeling like it was distribution taking place, but I was overexposed. My position size for the short was too big, and it was a hedge position, but it was too big because I was fighting a blue sky bull at that point. So where does my stop go, and where do I limit my downside on that position? So they did shake me out of half of my position, fortunately still in half of that position, and days like today continue to go really well where my hedge position goes up and my long-term positions or my swing positions go up as they are growth related as well. But this is definitely a learning experience for me, and I am taking lots of mental notes to save this information for next time. So it's entirely possible that even though XLF was going up, that it was XLF profit taking going into the growth names. So some tricky selling, disguised selling is what we'll call it. And it was the point, at one point we had 8 days in a row with a higher open and a pullback first thing in the morning. So that's just me thinking aloud and reviewing a bit. Weekly uptrend will be key, but keeping in mind we have not seen monthly consolidation in XLF. This is one of the reasons I was watching for XLF growth, and the other reason was the fundamental aspect where these are reopening names that are correlated to XLF, where you've got the airliners, the cruises, the casinos, etc., and me looking for the fact that the vaccine is rolling out and that we're reopening, looking for that to be priced in. So we have not broken the pattern of a higher low every month for the last 8 months in the financial sector yet, but still watching for that possibility into monthly consolidation. And the growth name bounces, we have to keep in mind that most growth names will still need weekly trend changes for follow through. Even our lead growth bulls, NIO, will need a weekly higher low and higher high. PLTR, other lead growth bull, will need a weekly confirmed trend change. There are two ways that weekly consolidation will play out in our growth names. Number one, on market fear with all of our sectors dropping and growth dropping with them, trying to set weekly higher lows. The second way is healthy rotation. What would that look like? That would look like XLF setting a weekly higher low, and for me, anything above 34.42 is a weekly higher low. So pulling back, setting a weekly higher low sometime within the next week or two, and bouncing. And while that bounce is taking place, the inverse relationship between XLF and QQQ remains. QQQ consolidates while that is happening. So XLF up, QQQ down. No fear in the broader market because XLF is going up. And then we see XLF confirm a weekly downtrend and confirm monthly consolidation is underway, while QQQ, most notably growth, I'm watching growth more than QQQ, but while growth sets weekly higher lows and confirms weekly trend changes for monthly higher lows to be set, and for the names that have already set monthly higher lows for follow through from the monthly higher lows being set. So that's now me looking ahead for the next 2 to 4 weeks as to how weekly trend changes could take place in the growth sector. So that's what I'm watching from here. IWM, daily higher low set 228.71. Key resistance 233.64. Unable to break that level today, but only a red flag for bulls if that support level breaks, because it would be a confirmed daily downtrend and it would be a rejection from the all-time high if we lose that daily support level. From there, we would look for a weekly higher low, plenty of space for it, but bulls obviously just want to take out that new all-time high and not lose the daily uptrend just yet. XLV, daily inside bar bear break with no follow through, potential bull flag, potential cup and handle. Left side resistance, pullback, inability to break resistance, bull flag. Let's see if it joins in. And just another example of a cup and handle, because again, cup and handle is the most incorrectly diagnosed pattern that I see on social media. They are rare, but we've got some good examples. QQQ gave us a good one today. And it was, where was it? Right here. So high of the day, low of the day, high of the day, curling down. Inability to break the high of the day, we rejected by 13 cents. Bull flag confirmed. So during this, I said in the chat room, this bull flag started forming. I said, if 341.92 holds, it's a potential cup and handle. At that point, that level had already been hit, and we formed an inside bar, because if that level had broken, it would have just been a 15-minute equilibrium. So that's one way to play bull flags. If I'm real aggressive, I could say, okay, if this is going to be a bull flag, that needs to be the low. If I want to be real aggressive, I enter a large position with a very close stop level nearby, and I either get stopped out with a very small amount of risk, or we get some solid follow through. Natural gas has some good cup and handles, which we'll look at in just a minute as well. Some other little details from day trading perspective. This pattern is very common during this growth rotation. A quick drop in the morning, V-shaped recovery to the new high of the day. Growth names have been doing that consistently for weeks. What shook me today, didn't shake me, what confused me today was watching the relationship between growth and big tech. Because big tech, we'll use Apple as the example. Big tech did it today. So look at Apple, drop, V-shape, high of the day. So it's normally growth that's doing it, but big tech did it today, and Apple and growth was inverse. So look at Apple to start the day, open, 6 minutes, we pull back, and then for the next, 10, 15 minutes, it's all bull. 6 to 8 minute pullback, 10 minute, 15 minute bull. 1, 2, 3, 4, 5, 6, 7, 8, 15 minute bull. Look at the biotech sector, which is growth. 6 minute bull, 15 minute pullback. Look at TLRY, MJ, which is growth. 6 minute bull, longer than 15 minute pullback. ARKK, 6 to 8 minute bull, less significant pullback. But my point is, I saw that inverse relationship between big tech and growth, and it threw me a curveball because I haven't seen that. I have not been observing that over the last few weeks. So my initial reaction is, okay, this is happening, and it's not, how do I capitalize on this? It's, okay, this is happening. I need to observe the rest of the morning to get clues and information because this is new for me. And one time doesn't make a pattern, but it can give me information. And the information that I gathered from that is big tech stood out strong, but growth also stood out strong as well. So in the end, the bulls ended up just fine in both sectors, but it was just very odd for me to see that inverse relationship. We're used to XLF and QQQ inverse. We're not used to growth and big tech, that tick for tick inverse to each other. So that was very interesting to observe. And again, nothing to act on, something to observe and watch how it plays out. Another thing from today, from the day trading world, Tesla gave us the volume signal. And the volume signal kicked in on the second 5-minute candle of the day with massive 5-minute volume comparative to the first. And the big difference is this is the first example we have in the last bunch of weeks where it didn't see follow through. I have pulled a muscle right here, talking too emphatically. So Tesla on the 2-minute time frame, the signal on the 2-minute happened, and again there was a tiny bit of follow through, 0.5%, but if you look at what NIO did last week, when it did it, we had huge follow through. Was that Friday? Yeah, so Friday, NIO did it, the third candle of the day, nothing but bull follow through all day. So it's obviously not going to work every time, but that's an example where if I'm acting on that pattern, for me personally, on the conservative style, I sell half into strength to lower my cost basis. And if that had happened to me on Tesla, I didn't take that Tesla trade on that volume, but if it had happened to me and maybe I made an entry at 622 and we get a little bit of follow through, as soon as that bull break happens with a lack of follow through and I know the 5 minutes extended, exit half. If I exit half at 624, my break even is then 620, and that makes it a lot more forgiving for the more rare times where that volume signal does not follow through. So XLV, cup and handle watch. XBI, keeping that grind up ever since that bull news from last week. Monthly still shaping up this higher low. We're looking at the high of May coming into play at 138.20. Anything above 133.35 will keep the bulls in complete control. And just slow grind up. Rotation into growth. Bull cross of the EMA 12 and 26 for the first time since all-time highs. That being said, as I mentioned, we will need weekly trend changes for these monthly higher lows to see any kind of meaningful follow-through. Even if it's going to give us a monthly lower high, we will need that trend change on the weekly for monthly follow-through. SMH, NVDA gave us the clue. There are clues in the markets all over. NVDA, daily higher low, or daily bull flag, confirmed on Friday. SMH, equilibrium Friday, confirming today. So just a little bit delayed, but NVDA certainly showed us a bull break of this pattern is more likely. And again, just tallies in the bull column. NVDA broke bull, broader markets at all-time highs, so this equilibrium favors a bull break. EMA 12 support, an all-time high 257.54 is the next resistance level. Nope, not all-time high. Still in a weekly equilibrium, have to break both of those resistances for follow-through. It would still be possible to remain in the equilibrium. The next couple days will be key. If we were to get no follow-through and lose the daily higher lows into the end of this week, it's notable. Speaking of which, Wednesday, FOMC, 2 p.m. Eastern, Friday, quadruple witching. If you don't know what either of those are, Google them, spend an hour or two learning about them. TAN, gap up, following through, breaking the initial bounce high, 80.97. Good sign for the bulls. So we have a little weekly higher low and continuation here. It's a little bit different than other growth sectors because it was weaker. Now it's trying to see some follow through. Monthly high of May is still key, 83.78. Grinding that EMA 12 and trying to get bounce follow through. And we'll call anything above 74.88 a daily higher low next time we consolidate. But keeping that bounce going. The VIX is a potential 4-hour falling wedge. Worth watching. Bulls prove absolutely nothing as long as the lower highs remain, but we're seeing bear breaks with a lack of follow-through. And as we head into FOMC and quad witching, just need to be a bit cautious in the market as a whole. Again, bulls have complete control overall. We know that can change very quickly, which is why if we see rising wedges, not a bad idea to hedge. Maybe the hedge loses some money, but peace of mind maybe is worth a bit of lost money to protect those long positions. The dollar, right up at daily resistance. If that level breaks, the odds of a weekly bear flag will decrease a bit. Bulls will still have to follow through more, but we're keeping the daily uptrend alive. And with that, gold got a bear break today. Lack of follow through at the moment, but we need a 4-hour trend change back to the gold bulls if I'm going to call this a daily trend change bearish with no follow through. If that happens, the weekly consolidation remains healthy. So bulls really want to change that 4-hour trend back in their favor. If we see this bounce and then just drop to a lower low, all that was doing is cooling off short-term RSI levels, and that will be daily bear follow through. So the dollar key resistance break and the 4-hour trend on gold are key. Silver is way stronger than gold. Silver held the low of Friday, and it's holding the low of last week easily. So weekly consolidation, inside bar, much stronger than gold at this point. Gap down open for buying on the miners. We were looking for the miners to bounce this morning because gold was crushed on the hourly and on the 15-minute heading into the open. Nice big bull move right when the bell rang at 9:30. But the bulls will have to change the hourly trend bullish on the miners if we're going to look for any follow through. Nice move. Have to break the high of today, tomorrow to confirm the hourly trend change. I am not kidding. I pulled a muscle right here. Oil. So oil, here's another one where my resistance line, bulls broke it. You know, this is where I had it. But all I do is just tweak it a tiny bit. Nah, we're still rejecting. Still valid, tons of touches. So that is the only resistance level to be watching. 4-hour uptrend keeping intact for the bulls. And plenty of space. Well, not plenty of space, but bulls want to hold 68.47 next daily consolidation to keep full control. And the energy sector, I would think it would be stronger than this. That's notable to me. Natural gas breaking out, as we'll see. Oil still very strong. But puttering out in the energy sector, keeping an eye on that. Natural gas, daily bull flag confirmed. Weekly bull flag confirmed. That was a really cool setup. Just little fractals of each other. And bulls in control. I believe it was this day in the market video where I said keep an eye on natural gas. And again, same thing. If we see this green candle, and if I'm looking for this to be a cup and handle, I can make an entry and put my stop under that low. Because if that low breaks at that point, then I am wrong. It is not a bull flag, and I don't want to be in that position. So once you get really comfortable with flags, you can start seeing if this is going to be a flag, this level has to hold, and then you make trades based off that level. You'll stop out a bunch, but it's a real small loss. And when you're right, the reward is way more than the risk. So swing trade tech. So this was a message Sunday night. Which high-flying tech from Joe is the best setup for next week? Netflix potential laggard watch, Apple trying to laggard Amazon daily breakout. And my point about Google and Facebook, they've been the lead bulls at all-time highs for the last few weeks. So we're watching for these other names to potentially have their turn. So for me, Apple and it, here's another one clue. Talking about clues in the market, look at Amazon's breakout last week. So first look at the daily. Tight daily range. We know that Amazon and Apple have been range bound for weeks. Amazon bulls proved it on Thursday last week. That was the prove it candle, getting over these resistances, solid volume, green Marubozu candle, bulls prove it. So I see that happen, and I look at Apple and say, oh, well, Apple is still weak. Let's go bigger picture. What's the most likely scenario for Apple? Weekly equilibrium. I'm expecting a weekly higher low compared to 116.21. So what do I need to see for a weekly higher low to convincingly be set? Bullish action on the daily. Again, tally it up. Bear column, bull column. Bear column, well, QQQ's at all-time highs and Apple and Amazon aren't responding. There's one tally bear. Bull column, broader markets at all-time highs. Amazon already broke bull. Apple's just looking for a weekly higher low in an equilibrium. If QQQ's going to see a new all-time high, Apple and Amazon definitely need to break these daily ranges bullish. And Apple, daily inside bar bull break, it was a laggard. Apple move today was laggard to Amazon. A relationship between Apple and Amazon during this tightening range that is less common than I can remember is they're taking turns. Apple, let's just look at Amazon's biggest day. So Amazon's biggest day, or days, we had a June 8th day was a solid green day, and June 10th. What was Apple doing June 8th and June 10th? Rejecting from resistance and closing weak and red. What did Amazon do today? Green day, and the end of the day really changed that and made it a real strong day. But before that last 30 minutes, solid day, but comparative to peers, nothing really stood out. And Apple was up, I was looking at Apple up 2.1%, while Amazon was up 0.7%. So spotlight's on Apple, then it's on Amazon, then it's on Apple. It's not on them at the same time. There's been plenty of times in the past where it has been on them at the same time. But again, these are just tiny little observations where you recognize a pattern and can act on it. And the reason I was looking for Apple to laggard the Amazon break was because it was the most likely scenario, in my opinion. So tons of tops, 4 tops in the 128s, And there's your volume, and there's Apple following Amazon, which made the same move 2 days prior. Why were we looking for Netflix to be bullish? I was looking for Netflix to be a bear flag. So here, I was saying, if we see any broader market weakness, Netflix is a lead bear ready for a weekly bear flag. Obviously, there is no broader market weakness in sight. So rather than looking for it to be a lead bear, we then look for it to be a laggard bull. So if everybody's going bullish and the market is all bulls, where are people going to be looking to put money? Well, Netflix is X% off its all-time high. And Netflix has been consolidating for 2 months since earnings, 4 months since earnings. Well, not since earnings, but we've been consolidating for 4 months. So rather than looking for it to be a weekly bear flag, let's look for it to be a weekly high or low. And if the bulls can get over 512, we confirm a weekly trend change back to the bulls. We then zoom in. Okay, what do we need to see happen? Take off extended hours on the 4-hour to just condense it down. Drew this pattern this morning or over the weekend. That was the pattern. Bunch of support touches. I did leave out this one outlier candle because there's way many other touches that make me really like this trend line. Aside from that one candle, I can disregard one candle. And on the daily, resistance. And then the bulls just took complete control today. And Apple and Netflix were lead bulls, and they were both laggards. Apple and Netflix comparative to Google, Facebook, Amazon, and Microsoft over the last week of trading have moved up the least. So money goes to the laggards. As long as there's no red flags, bigger picture, laggards. I am very done talking. Have a good rest of your day. Do good things. See you tomorrow. Some magnolia blooming. This is the fig tree that lived in my room over the winter in a pot, and it took nicely. So in another 5 years, that'll be a big 15-foot tall guy. Many would say these bushes need to be trimmed, but I like how they flow down and look like water coming over the wall. So this is where all those tulips were early in the spring, and people were talking about concerns about the erosion and all those bare spots, and this just shows you what a temperate rainforest does in 6 weeks of spring and summer. Got some zinnia progress and some flowering comfrey. But these zinnias will be all along the driveway. They should get 4 to 5 feet tall by the end of the summer.